Today. I wanted to give you a quick portfolio update and then talk about why I'm not really concerned too much with the imminent upcoming recession. Everyone keeps talking about how there's going to be a recession in 2020, yada yada. I'm not too concerned about it, and I try not to weigh in on what people think the market's going to do because most of the time they're wrong. So to start, I wanted to show you my portfolios here. Um, I'm a little down on M1 Finance, but that is due to real estate. Again, it doesn't follow the market, but it is a great source of dividends, especially monthly dividends. So I do have it weighted as my highest sector. I don't think 20% is too high. I actually think it's probably a little bit low. I would like to have it at around, 25%, but I'm going a little conservative with some, 15% in bonds or so. So yeah, everything else was pretty much up, except utilities, but everything else was up. But since real estate was 20%, it did bring my whole portfolio down. So that's my M1, and then I wanted to show you Robinhood. Robinhood is up, and it is up 0.5%, $24, not bad. And this is mainly due to um, just my ETFs that I'm in and my healthcare stuff that I'm in. Again, like I'm in, I only got 2 shares of this bond ETF. I bought Coca-Cola with just some money that I deposited. That's pretty much all I've done with this account. Again, I keep you guys updated on the moves that I make. And for now, actually, all I've been doing is just kind of slowly buying some more ETFs, trying to get it up to about 50%. Currently, I think I checked the math last time at about 40 to 45% in ETFs, and I'd like to be at about 50%. And then I'll start messing around with some of these stocks a little bit more, starting to sell off some and starting to go heavy into certain stocks and trying to, buy low, sell high, the classic there. And that's how my portfolios are doing this week. I don't read into the news. I don't buy and sell off the news. I recommend you guys don't do that either. And as always, I'll link these both down in the description so you can look at the exact stocks that I have. I kind of just scrolled through my Robinhood, but I'll link the M1 Finance in the description so you can see every single stock that I'm in. It'll tell you the weights, but it won't tell you the dollar amount, of course. So now I wanted to talk about the recession, the upcoming recession, and why everyone is scared to invest and everything like that. So I just go to my month view here, and so I gained $81 this month, and there was talk of a recession, 3 or 4 months ago, and so if we go to 3 months, so that's $170 right there. That's 3% of my gains that I wouldn't have got if I would have listened to them and not invested until the stock market, hits bottom or timing the market. It's about time in the market, as Warren Buffett always says. And guys, I always heard of a recession. I even heard it up to a year ago, and that's 10% this year that I would have lost out on if I would have listened to them. So again, I don't listen to the news. The inverse yield curve, for the U.S. Treasury bonds is concerning, I guess. It's a pretty good indicator. If you haven't heard about it, just look it up. But I'm not too concerned about the inverse yield curve. I'm not too concerned about the recession. There's 2 reasons why. Again, no one really knows when a recession is going to happen. As you can see, people were talking about this year is going to be a recession, and obviously 10% gain in the stock market is there's not a recession. And the other reason is based on the underlying philosophy of pretty much both my accounts. These ETFs, a lot of them are monthly dividends, but they're all paying dividends. And this, as you know, is a strictly dividend investing portfolio. I'll go ahead and link to a card, up in the right-hand top of your screen so you can go in depth on my strategies that I have for each one of these. But why I'm not concerned is because recessions really don't affect dividend payouts. Yes, they affect capital gains, which is this right here, market gains. As you can see for this week, I'm down $15 in market gains, but my earned dividends will always be positive. And a recession does not affect your dividends as much as your market gains. You'll still be getting paid. You know, if you're getting $25 a month like I am, you'll still be getting paid about $20 or $25 a month. Maybe a little bit less. Maybe a couple companies cut their dividends, but when a company cuts their dividends, that is when I really think about selling the company, not when their stock goes down. When they cut their dividends, that's the biggest sign for me to sell. And so, you know, you have people, won't name names, but they always say that the recession is imminent and that we should prepare for the recession and, you know, go bond heavy or whatever. And I don't think that's necessary. So I think that to keep dollar cost averaging down during a recession, if it does happen, and continue to receive those dividend payments, and you can't really go wrong. And so I wanted to go ahead and show you, so the underlying strategy, you know, Robinhood, here's my dividends per month. So this graph will remain the same while this graph goes down, okay? That's how that's how recession works. And as long as this graph continues to go up or at least stay level during a recession and this graph is going down, I'm not too worried. When this one starts to go down, that's when I become concerned. And that's never happened for me. And hopefully it doesn't happen for you guys either. So I hope you guys understand, you know, a little bit about why I'm not too concerned. Again, I don't think my dividends will be cut a lot at all, you know, if at all. However, the portfolio value will obviously go down, you know, because during a recession, this will go down 20, 30%. It'll go from 5,000 down to 3,000. That's fine as long as my dividends remain constant. So that's what I wanted to share with you guys. And again, don't read into the news. Don't buy and sell off of what other people tell you to do, including myself. Buy what you think is a good investment and what you think will make you money every month. That's what I do. And so I hope you guys learned something new. Um, just hang in there. Keep your automatic deposits going. Be consistent. And I'll see you guys next week. Take care.